What's up, everyone? It's Karthik with MoneyVest. So the buying window is open and officially here. So I think it's really important for us to keep dollar cost averaging, keep investing, and keep buying. I think I've been mentioning this for over several of my videos because the markets are not going to wait. They are not going to wait for you to fully be ready to dollar cost average into them. I mentioned a very, very important message in our community earlier today, so I definitely want to break that down in more detail. But really, this is a PSA, public service announcement for most investors out there. If you've got a long-term view, if you've got a long-term horizon in the markets, if you're investing for the long term, I think it's really important to understand that markets don't give us very many opportunities, and when the opportunities do present themselves, I think it's really important to take advantage, and I am your messenger during this market sell-off to take advantage of this sell-off here. So QQQs, what an incredible rebound here, right? 2.5%, 469, a very, very strong move to the upside. This is probably one of the strongest days we have seen for the markets here on 2024. S&P is up a little bit over 1.5%, and this is happening prior to the Jerome Powell's FOMC meeting and speech that's going to happen at 2:30 p.m. Eastern. So I will be live in about 4 hours to cover the entire speech, and we'll see if Jerome Powell says the right things to continue for this market rally to go up and for this to continue, or is he going to throw water in this entire market rally? But regardless, right, I really don't want today's market rebound or yesterday's market sell-off to really be the determining factor whether we buy or sell or hold. I think it's really important to understand that the risk reward is getting better now, right? It's much better than what it was a couple of weeks ago when the markets were trading at all-time highs. So let me ask you this. Was it a better deal when the S&P was trading at 5,700 or 5,670, or when it's trading down as low as 5,500? What is a better deal for you as an investor? And I'm assuming most of you are going to answer right now. It's 5,500, 5,520, because the risk reward is better, right? Prices are lower, hence slightly lower risk and slightly higher reward compared to when the markets were trading at near all-time highs. And that's the whole idea behind the analysis here. And this is not to say that the bottom is in, we're done, we're moving back to all-time highs, and it's time to buy. No, nobody really knows. At the end of the day, nobody knows. Nobody has any idea what the markets are going to do, right? I can't sit here and tell you exactly what the markets are going to do because I'm going to be honest, I don't know. And my guess is just as good as the next person. But what I will tell you from my understanding and my expertise is that the risk reward is getting better. So it's more important to deploy cash. So I went on a little bit of a shopping spree earlier today myself, picked up some stocks, picked up some ETFs, investing a little bit more, selling cash script puts that are already up. So NVIDIA put that I sold yesterday is up over 44% in just one day. And that's because NVIDIA is up over 10% on the day here. So very, very strong move to the upside for NVIDIA on the back of course, Advanced Micro Devices numbers, AMD's numbers. AMD's also up a little bit over 8%. So NVIDIA pushing up over 10%, back up to over $114. Tesla is up over 4%, back up to $230, kind of testing that 233 level again. And we got Amazon up almost 3%, Meta's up over 2.4%, Apple's up over 2%, Google, Netflix pushing up over 1.5% to 1.2%. as well, with Microsoft down almost 1% here. So we are seeing a lot of momentum, and this right here are some of the things that I mentioned that I want to reiterate in this video. I'm going to keep it nice and short, but on July 24th, let the prices come to you. I can't emphasize this enough. The buying window is opening up and the opportunities are coming our way. Wait patiently and take advantage. NASDAQ is in a pullback now. S&P could also get into a pullback soon. Support levels to watch, of course, sharing the entire technicals, and the MoneyVest index came down to as low as 3.48. That's the lowest print I've seen on the MoneyVest index more recently was 3.48, so coming down to sub 3.5, entering that yellow zone, and of course coming to those levels. Yesterday mentioned it's CSP time, folks. Market selling off, individual stocks selling off. It's no doubt the best time to take advantage of higher put premiums. Look at your shopping list, buy targets, target allocations, and see what stocks and what prices are best for selling puts. We are here to help you analyze CSPs if you have any questions, but do take advantage. It is significantly better than sticking that money in a bank and of course earning nothing. And then finally, this was from today. Keep some dry powder. Keep some powder dry, but as mentioned before, buy. Don't let the buying window close on you. We don't see markets in a dip / pullback very often. Forget corrections. Buyers are stepping in very aggressively today. Not saying the bottom is in, nobody knows, but the risk reward is much better than where we were a few weeks ago at near all-time highs. So take advantage, in my opinion. Good time to sell CSPs or invest or buy. And I also want to set the record straight. I do not want to hear in the future people telling me I'm a bear, okay? Because I've been very vocal during this market pullback and this correction to be more aggressive, to be dollar cost averaging. Opportunities are opening up, buying windows coming up. I've been sharing my shopping list as well as explaining, how volatility works with regards to the markets selling off. We did see a nice little spike here in the VIX from lows of about 12 to as much as 19, almost 20, up over 61%. And it's now starting to roll back down a little bit over 7% here on the day today. So trading just down to over 16 as the markets are having a very, very strong recovery. There is also VXN. So VXN is the volatility on the NASDAQ 100, which we don't really cover all that much. Maybe we should start covering it a little bit more. This is going to be some delayed data, but it also did spike quite aggressively. It's down a little bit over 4.8% right now, but VXN also did spike over 52%. To its highs of 24, 25 levels, coming up to levels that we have, again, consistently seen in the past. Some of these areas where, again, when the volatility was higher, QQQs were lower, and those were very good buying opportunities for the market. If you come take a look at Magnificent 7, so this right here is the Magnificent 7 stocks. You can see that we obviously did roll over. RSI came down, MACD came down, L3 Banker Oscillator came down. Everything started to, reset a little bit. This was the higher lows, and again, starting to bounce back higher, up a little bit over 2% from those levels once again. So the only message that I want to get across in this video, is this the bottom? I don't know. Is the sell-off is over? I don't know. Are the markets going to go even further down? I don't know. Are the markets are going to go back to all-time highs? I honestly don't know. So the bottom line is I don't know anything. I'm just kidding. So bottom line is that the risk reward is what we're here to analyze. Okay, I'm going to be honest. I'm not going to try to predict the markets. I'm not going to try to tell you exactly where the markets are going to go if I myself don't have any idea. But the bottom line is the risk reward is getting better. The risk reward is what is improving in the market. And that's why I don't mind taking advantage of those opportunities to dollar cost average now. And again, I'm going to keep buying and keep emphasizing on this point that our job is to analyze how good the potential reward is compared to the risk in the market. And right now, if you take a look at just Magnificent 7, the potential rewards back up to over 11.5%, 12%, with a reasonable support that I see of just under 5%. Now, can it come down to 1600? Sure, that's an 11% downside with an 11% upside. It's just a 1-to-1 ratio here at these levels. But the lower it comes down to, the better the risk reward then becomes. Let's say, for example, now Magnificent 7 is trading down to 1680, right on this level. Now the reward is going to be upwards of 22%, with the risk being under 4% as compared to the next support level. So that's what I mean when I say the risk reward is getting better. Start buying, in my opinion. Dollar cost average. As always, if you enjoyed this video, I'm excited. Hope you guys are too. So take advantage while this buying window is still here. And like I said, I want to be very clear. This could very well be a little bit of a bull trap, or a time where we did get a technical bounce or a dead cat bounce and the markets can be heading lower, but that's only going to result in better buying opportunities. That's exactly why I mentioned to keep your powder dry. Hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Also, do check out the Patreon link down below if you want to join, of course, be a part of our MoneyVest community, access to all the amazing trade alerts, trade ideas, Discord channels, members-only private videos, MoneyVest platform. Everything's going to be available with the link down below. And as always, happy investing. I'll see you all in the next video.